Is Ottawa's real estate market heating up or slowing down? The August numbers are in, and they tell a different story that you do not want to miss. Today, we'll cover the latest Ottawa real estate stats, what this means for you this fall, the September 17th Bank of Canada decision that could flip the market overnight, the overlooked metrics, days on market, and months of inventory, and finish off with how Ottawa compares with the rest of the country nationally. By the end, you'll know if it's the right time to buy, sell, or wait. To give you some context, live in the trenches, for the month of August, I sold 8 properties. 4 of these properties I was representing sellers, and 4 of the properties were representing buyers. Interesting to note, out of the 4 listings that I sold, 2 of them sold in multiple offers, so above list price. This is not some crazy COVID seller's market we're in, but we are seeing multiple offers in various pockets of Ottawa. So something to tune in as we go through all of the data. In August, Ottawa saw 1,236 homes sell. This is up 12% from last year. Year-to-date sales are just under 10,000, which is a 4% increase over 2024. In August, a total of 1,236 homes were sold. This is a 12% increase from last year. And year-to-date, so taking a look at the bigger picture, there was 9,936 homes sold so far this year. This is a 4.1% increase over 2024. All great news. The average sale price was $686,536. This is a 3.6% increase year over year. Listings climbed to 3,971, or about 37% above the 5-year August average. That puts Ottawa at a 3.2 months of inventory. So a number we'll come back to later, because I really want to break down months of inventory, because I think it's critical to know as one leans into the data and understanding what is really happening in Ottawa. By property type, so townhomes surged to 8.3% year over year with a benchmark price of $466,200. Single family homes rose by 1.5% up to $700,100. And condos slipped. We've been talking about this a lot. So condos are coming down. Right now, 1.1% for the month of August, averaging $412,300. And I can share this data does stand true. When we look more specifically at the condo stat that we just went through, out of the 8 transactions I did in August, one of these was representing a buyer who bought a condo. We got an absolute smoking deal on this property. We were able to negotiate, I think it was around 93 or 94% of list price to sale price. And this just came down to because it shows how much supply there is on the market right now for condos, how little demand there is, and then the deal that this particular buyer that I was working with was able to get. One of the most important but overlooked stats is days on market. In August, Ottawa homes took on average 34 days to sell. That's up from 29 days last year and slightly longer than July of 2025. Why is this stat important? Well, it's really important when working with sellers in terms of managing expectations. You know, we list a property and every seller expects that it's going to sell in the first few days or week. But if we can present this to a seller, and if a seller can really dial in and saying, realistically, what is the average days on market for a similar property in my particular neighborhood? And if you find out it's 30, 34 days, well, that helps you manage the expectations when you're on the market. You're not going to expect the property to sell in the first day or 2 or week that it's on the market. Now, that would be great, but it doesn't always happen. So days on market is something that is really important for everyone, both buyers and sellers, but I would say more specifically for sellers, for them to really manage those expectations when you're on the market. People coming through your property, collecting feedback. You need to feel comfortable with how long this whole process is actually going to take, and patience does matter. Homes are still moving, but buyers aren't rushing in with instant offers. Now let's talk about months of inventory, a metric that defines what the type of market you're in and really the health of the entire market as a whole. As of August, Ottawa sits at 3.2 months of inventory, according to the Ottawa Real Estate Board stats. So how to read this? 0 to 3 months, that means we're in a seller's market. So like COVID market, properties are flying off the shelf, multiple offers, no conditions in these offers, and property selling like 10, 15, 20% above list price. Balanced market is anything above 3.0. So we come in at 4 to 6 months of inventory. This is a balanced market. So this is where we are right now. And then 7+ months of inventory, then you're in a full-blown buyer's market. It's kind of like doom and gloom in that sense. So at 3.2%, where we are right now, we're sitting on the edge of a seller's market, but actually in a balanced market. This explains why townhomes are appreciating so quickly and coming in over 8% year over year increase. Detached homes are stable, coming in just around that 2% year over year. And condos, we're seeing that pressure where prices are coming down. It's a matter where neither side fully controls. Buyers have choice, but sellers still have some control in the process. So what does this mean as we move deeper into the fall? Well, for buyers, you have more listings to choose from, more time to negotiate, and in some cases, like condos, more room to push on price. As I shared, this buyer in August that I was representing was able to get the property 7% below the list price. That was terrific. It's like almost unheard of, but in the condo market, we can do this. Townhomes, though they remain competitive, it's still important to know that they are fetching really good dollar amount because a lot of buyers are flocking to it. For sellers, townhome owners are in the best position. Detached homes will still sell steadily if priced right, and the condo sellers need to be creative. You need to consider incentives or sharpening your price. Know the competition. If there's something similar to yours on the market right now, you have one shot with the buyer. So make sure you're priced appropriately so it's an irresistible opportunity when that buyer goes through your property and then they go through the other condo that's on the market. You want it to be an obvious yes. Control the negotiation. I always say that every time I work with a seller. We can't control what the market does. We can't control what the other sellers do. We can only control your property and your negotiation. Make sure you have control in that position. For investors, townhomes continue to be the most stable. Condos carry risk with weaker demand and stalled pre-construction. Now let's talk about the big national headline news, which is the Bank of Canada's rate announcement coming up on September 17th. The policy rate is currently at 2.75%. It's unchanged since March of 2025. We took a look at all of the big banks, and I want to break that down for you and summarize it. So TD is predicting a 50 basis point reduction by year end. So TD believes by the end of 2025, the Bank of Canada overnight lending rate will be at 2.25%. Then when we look at Scotia and BMO, they're kind of merged together in their opinion, and their analysis are forecasting a 0.25 reduction. So on September 17th, they believe the rate will come down to 2.5%. Now taking a look at RBC, they expect the Bank of Canada hold at 2.75% as we lead into 2026. RBC isn't predicting any further cuts to the overnight lending rate. Interesting how all four banks have different opinions on this. All will come out in the wash on September 17th at 9:45 a.m. Eastern Standard Time when the Bank of Canada announces their rates. Why does this all matter? Well, roughly 60% of mortgages are coming up for renewal 2025 to 2026. And the Bank of Canada estimates many households could see payment hikes of anywhere from 10 to 20%. This is significant. If rates are cut, variable rate holders get relief and demand could pick up. If rates hold, affordability stays capped and Ottawa remains steady but not surging. So how does Ottawa compare to the rest of Canada? Well, let's put the numbers side by side. Sales. Nationally, home sales in July were up about 6.6% year over year. In Ottawa, taking a look at the August data, they were up almost 12%. So Ottawa is growing nearly twice as fast as the national average. Prices across Canada, the MLS Home Price Index is actually down 3.4% year over year. In Ottawa, prices are up 3.6%. That's a 7-point swing in Ottawa's favor. And when you break it down, Ottawa's townhomes are up 8.3% year over year. Detached homes are up 1.5%, and condos are down slightly at 1.1%. Nationally, most markets are seeing condo weakness, so Ottawa is consistent there. Inventory. National inventory is sitting at 4.4 months. Ottawa is tighter, coming in at 3.2 months of inventory. This means sellers still have an edge compared to many other Canadian markets. The bottom line, nationally, the housing market is cooling. Sales are modest, prices are flat to negative, and inventory is higher. But Ottawa is outperforming. Strong sales growth, better price appreciation, and leaner inventory. Ottawa isn't just holding steady, it's beating the national average on nearly every major metric. So what's next as we head into the late fall and winter? Sales should hold steady and modest growth. Townhomes remain the hot ticket. Detached homes stay stable. Condos will likely remain soft. Inventory will stay elevated, giving buyers more choice. And of course, the September 17th rate decision will set the tone for the rest of the year. So here's the August 2025 takeaways. Ottawa is balanced, townhomes are thriving, detached homes are steady, condos are under pressure, and homes are taking longer to sell, approximately 34 days on market. We're sitting at 3.2 months of inventory, tighter than the national average, keeping us in a balanced market with sellers still competitive in certain segments. But the big question is, what does this mean for you if you're thinking about making a move? Should you buy now while prices are stable and interest rates may still shift, or wait to see what the market plays out? In my next video right here, I take a deep dive into the pros and cons of both options, backed by the latest data and trends. Be sure to check it out.